Hey everyone, and welcome to This Explainer. I'm your host, Osh, and today we're unpacking a topic that is honestly as deep and complex as the oceans themselves, the economics of offshore oil rigs. Now, we aren't here today to geek out over the engineering. Instead, we're focusing on the intense, almost unbelievable financial reality behind them. Constructing and keeping just one of these assets afloat requires a really delicate balance of immense capital, hyper-awareness of global markets, and frankly, ironclad nerves.
Picture yourself standing right at the base of one of these towering structures. Now, I want you to look past all the heavy steel, the massive cranes, and the helipads, and really think about the ownership for a second. What does it actually take to financially own one of these behemoths? We're talking about a scale of wealth and risk that literally eclipses the entire GDP of some small nations, and it's all consolidated into this single footprint sitting out in the middle of a very hostile marine environment. Okay, let's dive into this.
To wrap our heads around this, we're going to follow the asset's chronological financial life cycle. Step 1, the scale of ownership. 2, initial capital investments. 3, daily operational costs. And finally 4, revenue and market volatility. All right, part 1, the scale of ownership, the risk versus reward matrix. So before a single piece of steel even gets cut, the owners are already facing this crazy fundamental tension. You know, this isn't like buying a piece of real estate or throwing some seed money at a tech startup. No, this is an absolutely massive gamble weighed against some seriously transformative potential payouts. You really have to view this single asset as a literal macroeconomic event. When a company decides to build an offshore rig, they're instantly tangling with global interest rates, huge international supply chains, and, well, geopolitics. And it's all compressed into one incredibly high-stakes project. Which brings us to part 2, initial capital investments, or CapEx, building the rig. Let's pause here for a second. Now, what's really interesting about this slide is just how heavy the upfront capital actually is to get this thing off the drawing board. Literally every piece of the puzzle demands huge funding. You've got thousands of tons of specialized steel, highly custom proprietary drilling tech, and of course, incredibly specialized naval labor. We are talking about locking up anywhere from $1 to $3 billion, yes with a B. And that cash is just sitting there for years before a single drop of product is ever extracted. And you know that initial massive investment? It's really just step 1 of a very strict timeline. First step, construction. This is basically a period of pure, unadulterated cash outflow. Then, step 2, deployment. Just moving this giant structure out into the ocean is a colossal logistical and financial hurdle all on its own. Next up is step 3, operations. But then, way down the line, we hit step 4, decommissioning. Owners actually have to budget for the extremely hefty cost of taking the rig entirely apart and safely disposing of it decades later. So the financial burden just constantly shifts from building the asset to moving it to keeping it alive and eventually putting it to rest. Moving right along to part 3, daily operational costs, or OPEX, the burn rate. So once that rig finally hits the water, the financial reality totally flips. Let's just compare these two realities for a second. Your CapEx, your initial investment, that's like a giant fixed mountain of cash you've already climbed. But OPEX? OPEX is more like a relentless river. It literally never stops flowing. Every single day, whether that rig is actually drilling or totally halted by a severe offshore storm, the bills keep coming. We're talking crew salaries, constant supply ships, helicopter transfers, and non-stop maintenance. It is a completely relentless daily expense. To put this crazy burn rate into perspective, think about a standard, nice suburban home. Just a few hours, literally a few hours of the daily operating cost for a deepwater rig could buy that entire house outright. These costs can easily hit $500,000 a day, every single day. That kind of money is burned just to maintain the status quo. If one tiny piece of equipment breaks or a storm rolls through and stalls everything, the owner doesn't just stop making money, they actually continue to absorb that colossal daily penalty day in and day out. Honestly, the most breathtaking part of all this, everything we just talked about, the billions in upfront capital, that insane daily burn rate, all those logistical nightmares, that is the sheer financial weight of owning just one single asset. The concentration of capital here is just mind-blowing. So let's shift gears and see how all of this builds up to the final phase of our financial life cycle. Which brings us to part 4, revenue and market volatility, the payoff. Because seriously, after laying out all that cash, how does this incredible journey actually pay off? Well, it basically rests on 3 really dynamic pillars. First up, Ownership gambles. You have literally placed a multi-billion-dollar bet on one very specific patch of ocean. Second, market volatility. You're selling a commodity where the price shifts by the minute, driven by global events completely outside of your control. And third, the macroeconomics of extraction. If the global price per barrel suddenly drops below your daily burn rate, boom, your prized asset instantly becomes a massive bleeding liability. So the crucial point is, owning this rig doesn't guarantee you a payoff. It just guarantees you a seat at literally one of the highest stakes tables in the entire global economy.
We've looked at the staggering scale, those massive upfront investments, the endless daily costs, and the completely volatile payoff of owning an offshore oil rig. But, as global energy policies start to shift, as technology evolves, and as we see new alternatives emerging, we really have to wonder about the ultimate fate of these financial behemoths. It leaves us with one massive question to ponder. In a rapidly changing world, what really is the future economic reality of offshore drilling?